Good morning, Bill Bodner, Mortgage Market Guide. Thanks for tuning in to our MMG weekly recap. Up on the screen, you can see on a Friday, mortgage-backed securities waking up on the wrong side of bed, down pretty much from a lot of pricing windows. 10-year note is actually now ticking up closer to 170. What has us concerned here as we wake up on a Friday, this little gap down, we've seen these movies play out, and they're usually not very good. So we need to see how we finish on this Friday. But looking ahead, a few things that we're thinking about. Number one, some key levels on the 10-year note, 175. We're at 167 now. I'd be looking at 175 as a kind of like a line in the sand and managing pipeline and on a 30-year bond, certainly looking at 250. And what it's going to be about over the next couple of weeks. Next week, we have a lot of jobs data. That's going to be a big deal. States are reopening. And we have this giant stimulus package that is now starting to come. And it's about fears of inflation. And, here at MMG, we don't think inflation is going to be nearly as bad as some in the, some good, really smart thinkers, as well as many folks in the media are talking about. We do see inflation being a significant issue over the next couple of months. The headline numbers will be scary on a year-over-year basis, but it's really what's after that has our attention. And so, longer term, it's still going to be about the Fed, still going to be about inflation. Those are going to be important things to track. And, part of that comes with the jobs report next week. Within the jobs report, there's the hourly earnings component. And if folks have to pay more to attract people, you start to get that, dynamic called wage-based inflation. So there's a lot to track. And, unfortunately, the volatility in both bonds and stocks continues to exist. And I think the other one thread that they're watching as well, which could be, have an effect, is this talk of this new stimulus package, including where taxes are going. And taxes are a killer. If there's one thing that the bond market might like, it's taxes, because it drains out demand. It sucks on consumer demand. It is not stimulative to the economy. And so taxes, if you want a rate relief, I think taxes could be one way to get it, because I think taxes would be, across the board, I think it would be detrimental to stocks. I think that would give a little bit more buying into bonds. So I hope you have a great day, a great weekend, and we'll be back at it soon. Bye for now.